Welcome back, everybody, for another deep dive. You know those headlines about Wall Street using algorithms to make millions? Today we're going to try to decode some of that magic.
Decoding is a great way to put it. We're tackling algorithmic trading, but not with vague generalities. We've got our hands on an actual document.
Yeah, this isn't some theoretical, pie in the sky. This is like a user manual for something called MetaQuant. And it's designed for building, get this, your own trading bot.
It's fascinating stuff and surprisingly transparent, honestly. You always hear about these systems being these black boxes, right? But this document lays it all out, nuts and bolts style, in a way that anyone can grasp.
Okay, so say I'm intrigued, but also maybe a little intimidated. Like, I'm not trying to just hand over my entire portfolio to a bot on day one,
Yeah.
What kind of safeguards are we talking about here?
So that's wise. And that's where this document gets really interesting. It gives you a lot of control. Take the max setting, for example. It's max setting. Okay. This lets you decide the absolute maximum number of open positions the bot is allowed to have going at any one time. So even if it thinks it sees like a dozen amazing opportunities, it won't go above your limit.
So let's say I'm only comfortable like juggling 3 trades at once. I can literally say, that's it. That's my limit. Stick to it.
You got it. It's all about keeping the bot aligned with your personal risk tolerance. If you're just starting out, maybe you set a lower max, right? And then as you get more experience, more comfortable, you can adjust, you scale your risk gradually.
Makes sense, yeah. It's not this all or nothing thing. You can dip your toes in and adjust as you go. So Max, that's one safeguard. What other features in here help like keep a lid on the risk?
Oh, there's more for sure. The document highlights X-tick and X-impact. Think of these as like ways to filter out market noise. X-tick means the bot will only make a trade if the price has moved a certain number of points, and you get to decide what that number is. So see, you set it to 10, and the price is just bouncing around, plus or minus 5, nothing doing. The bot stays put.
So in a really like volatile market, setting a higher X-tick would keep the bot from making all these like impulsive trades on every little fluctuation.
Exactly. You're basically saying, hey, only react if the move is big enough to actually matter,
I like it.
And then X-impact takes it a step further. It looks at like the depth of the market, how many buy or sell orders are actually out there at a certain price. So it makes sure your trades actually happen, at a decent price, and they don't like accidentally send the market into a tailspin.
So it's not just about like the price move itself, but the actual like weight behind it, making sure there's substance to it.
Right, precisely. And speaking of jumping in or out for that matter, there's the auto exit feature, and that one is big for managing your exit.
Okay. Auto exit. Yeah, tell me more about that. That sounds kind of crucial.
Picture this, right? You've got a trade going, but then bam, the market takes a totally unexpected turn. With auto exit, you set these like predetermined profit or loss levels. The bot will automatically close your position if those levels are hit, even if like in that moment the algorithm thinks, oh, it'll bounce back.
So even if like emotionally I might be tempted to hold on thinking it's going to turn around, if it hits my stop loss, it's out of there.
You got it. Takes the emotion right out of it.
Yeah.
It's about sticking to the plan no matter what, which, believe me, in a fast-moving market, that is huge.
Yeah, like having a safety net, especially if I can't be glued to the screen, 24/7. So we've seen how MetaQuant helps us manage risk, but what about actually like getting into the market? What jumped out to you about the types of orders you can execute with this thing?
Well, they make a really important distinction between what they call deal order types and pending orders.
Yeah.
It's all about how the algorithm actually interacts with the market. Deal generates these like immediate market orders, right now.
Right.
But pending opens up the door to more strategic limit orders, a little more finesse.
So deal is more like, buy now. And pending is a little more like, let me set my price and see what happens.
Exactly. Like the difference between like grabbing something off the shelf at full price versus like putting in a bid at an auction, a little more strategic.
Interesting. So there are options for different trading styles. I like it. This is already painting a more nuanced picture of algorithmic trading than I'll admit I had in my head.
It really does, yeah. And it gets, even more granular.
Okay.
They talk about this symbol setting, and this is where you get like hyper-specific about what you're actually trading. Could be a stock, could be a commodity future, whatever.
So you're not just saying like buy gold. You're saying like buy, December gold futures.
Exactly. And it even mentions like setting the expiration date, which especially for something like futures contracts, that's huge. You don't want the bot trading on something that's about to expire.
Right. Yeah. Set an alarm on that one. Okay, so this is all about precision.
Absolutely, yeah.
Mhm.
And the document really gets into the weeds. They even explain the volume setting, so how much you're actually trading. With each order, like one might mean one standard lot or one contract or whatever you're trading.
It's really interesting how they manage to make these like kind of complex ideas, make sense.
Yeah.
So we've got the what, the how, and even, the when with these deal versus pending orders. But what about the why? Like, how does this thing actually decide, okay, now's the time to pull the trigger?
So that's where it gets really, really interesting. They keep mentioning these things called HFT signals.
Okay, HFT signals.
So HFT, that stands for high-frequency trading.
Mm-hmm.
We're talking about seriously sophisticated algorithms operating on like incredibly short time frames,
Right.
analyzing market data, milliseconds, identifying these potential opportunities.
So these signals are basically like the bot's cue to either, jump in or get out based on these like lightning fast analyses.
Yeah, it's definitely next level stuff. But what's crucial here and what this document emphasizes is that you still have control. It's like, okay, imagine you've got like an amazing co-pilot, right? They're incredible at reading the roads, spotting those turns, but you still have your hands on the wheel.
Okay, I like that analogy. So walk me through this. Like, the bot gets this HFT signal, let's say. It senses this sudden, I don't know, surge in demand for, I don't know, vintage video game cartridges. What happens next?
Okay, love it. Vintage video game cartridges, they're suddenly hot, right? The HFT algorithm picks up on this. It sees, I don't know, a spike in online searches, social media chat, or whatever. It generates a buy signal. Now, if you've got the auto algo function turned on in MetaQuant, it's going to use all those parameters we talked about, the X tick, the X impact, your maximum open positions, everything to decide, okay, do we make this trade or not?
So even though there's this like advanced signal, it's not just blindly following it. It's making a like calculated decision based on my settings.
Exactly. It's not just this knee-jerk reaction. And this is where it gets even cooler. So the document explains how you can tweak how sensitive the system is to these signals using what they call SL and TP settings. That's stop loss and take profit.
Right. Setting those boundaries, when to get out.
Exactly, yeah. By adjusting those, you're basically telling the algorithm, okay, this is how much risk I'm willing to stomach on this trade, and this is how much profit I'm aiming for.
Okay, so that makes sense. But with all this automation and these, super fast signals, where does like my gut feeling come into play? Is there any room for that, or is this all like robots gone wild?
That is the million-dollar question.
Yeah.
And this document actually gives us some clues. It all goes back to that choice between deal, those immediate market orders, remember, and pending orders, more like setting your price target and waiting.
Right. So deal is more get me in now, and pending is more like strategic.
Exactly. And that decision right there, that in itself is a form of human input.
Are you reacting to the market right now, or are you trying to like anticipate where it's going? Huge difference.
Yeah, it's like the algorithm's giving me the data, but I still got to make sense of it. I like that.
Exactly. And this document, they really hammer that home. Like, they even point out how you have to actually validate every single parameter you put in. Like, you got to hit enter to confirm each setting.
Oh, interesting. Yeah. And it like highlights those confirmed settings in green. So, just that extra visual reminder.
Okay, so it's like that extra, are you sure? Before you accidentally like click something and throw your whole strategy off.
Exactly. Because, yeah, one little typo could get messy.
Right.
It just shows like how important it is to be, really meticulous, really intentional, even with these small decisions.
Yeah.
Because they can have big consequences.
It's like that measure twice, cut once, but in this case, it's check your settings twice, trade once.
There you go.
Yeah.
I like that. And speaking of checking those settings, remember all those features we talked about, the max, the X tick, the auto exit?
Right.
Well, the document actually walks through this, like hypothetical trade, step by step, shows you how it all works in action.
Oh, okay. Now you're speaking my language. Let's walk through this. What kind of trade are we imagining here?
Okay, so we were talking about vintage video games before.
Yeah.
Let's say our listener wants to put their money where their nostalgia is, try to capitalize on that market.
Okay, so we're sticking with the vintage video game cartridges. I'm in.
All right, so let's say our listener's a little risk averse. They're just dipping their toes in. They've got their max set to 2, so the bot can only have 2 open positions going at once.
Okay.
Their X tick is at 15, so they need a decent price move, at least 15 points before it even considers a trade. And they've got the auto exit activated. Stop loss, 10 points below their entry. Take profit target, 25 points above.
Okay, so they're being cautious, but also, aiming for those nice gains if it takes off. All right, what happens next?
Okay, so picture this, right? A rare game cartridge, I don't know, that elusive Space Invaders Championship Edition, suddenly hits the market. Price jumps, right?
Yeah, the hype is real.
But remember that X-tick is at 15. So the bot's like, hold on, let's see if this is for real.
It's got that, algorithmic patience. I like it.
Exactly. Now, let's say the price blows past that 15-point mark. Boom, bot springs into action, uses a deal order, buys a predetermined amount of those cartridges at the market price.
Okay, our listener is officially in the game. But vintage video games, it can be a fickle market, right? What if the collectors suddenly decide they'd rather spend their money on, I don't know, vintage lunchboxes instead? The price of the game plummets.
Uh-oh. This is where those safeguards kick in, right? Remember, auto exit.
Yeah.
Price drops those 10 points, hits that stop loss, bam. Bot automatically sells, limits the damage.
So even though the initial trade was all fancy algorithms, it's still looking out for me, preventing those big wipeouts.
Exactly. Now, let's flip the script. Word gets out that this Space Invaders cartridge, it's the only one known to exist.
Yeah.
Price goes through the roof.
Oh, okay. Suddenly we're talking serious money.
Right. But remember that take profit target.
Right. Stay disciplined. So even if people are going crazy for this cartridge, when it hits that target, boom, the bot sells, locks in those profits.
Exactly. It's about sticking to the plan, even when, your emotions are saying, like, hold on, it might go even higher.
This whole deep dive has been eye-opening. Algorithmic trading, it's not just about letting robots run wild. It's about having these sophisticated tools, but using them strategically on your terms.
Couldn't have said it better myself. And, this document, this MetaQuant thing, it really drives that home. Even with all the, the speed, the complexity, the real power is understanding these settings, these parameters, and making them work for you.
Fantastic insights. And listeners, remember, we've just scratched the surface here. MetaQuant, it's just one example of what's out there. So keep exploring, keep learning, and until next time, happy diving.